Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the global markets were pretty much on the edge for the last 5 consecutive days, with the weekend G20 summit was scheduled to kick off, and from that the market has now got to assess that the Trump and President Xi has agreed to restart the US-China trade talks. From that, the market did open slightly positive this morning, but rejected the level around 25.35, which was a key level to the top side. And now looking more to the fact that we're coming into a bit of a bearish, possibly outside range day if it remains the same pattern into the New York close tomorrow morning. This week we've got quite a big schedule of data, starting with today with China Cajun manufacturing PMI, and then tomorrow we have the RBA interest rate decision. Now at the moment the forecast is for a cut of 25 basis points from 1.25 to 1%. And then on Friday we have the non-farm payrolls report. That also is a crucial indication of where the markets could go. At present, for myself, I still hold bearish, and I still believe the market can push back towards the bottom side of the range. And if so, the rejection from this RSI would see the immediate target of 69.80 and then down towards 69.1035. Resistance, I do believe, will be locked in at 70.25.35 after today's rejection. Well, at present, we're still waiting for this outside range day, and from the 3 inside range days does set up the move for a further bearish case. I do believe a break of 113.30 will trigger the move down to 112.30.40 and down maybe to 111.60, where I am viewing as a buy zone in the short term, on to the fact is demand should return from that region. Any advances should still find a cap around 114.10 to 60. Well, dollar yen, since rebounding off the level of 106.60.75, is struggling as it approaches the level of 108.40. From the region of 108.40.60, I do believe the bears may defend this level and could see a return of supply and pushing it back towards the downside. Although a lot of the risk factor has been taken out with the Trump and President Xi, the fact is also that the US and North Korea had a bit of a meeting, and for the first time no presidents ever trodden foot on the DMZ, which is the demilitarized zone that divides the Korean peninsula after the handshakes were on Sunday between the two parties. Still, from a technical point, let's see if the market can reject this level of 40.60. If so, then we could see a pullback to 107.15 with the base still holding at 106.60. Not a lot to go on really for the pound as it continues to trade sideways and still holds to a bearish outside range day. We do need to see a break of 126.35 to get the trigger down lower to 126.10 to 125 figure. But there is minor support there at 45, but I believe the trigger level is at 35 to get that move lower and through 126.10. Resistance still holds around 127.60. Well, from the announcement from the weekend of the two parties looking to resume talks, is that gold plummeted through 1,400, briefly struck a level around 1,390, the base still holding around 80. I do believe from a technical point that that's where the buyers or demand will come in at around 76.84 and looks towards a further retracted challenge to the upside, filling this gap up towards 1,408, reassess from there. We are oversold, so I do expect this to emerge. Wrapping up with oil, the market is getting very closer to its objective that I'm calling at $60 a barrel, or even higher towards 62 or maybe 64. From a technical point, I do like this pattern, especially rejection of the midway point, so therefore should see further gains towards the top side and see if it takes on that challenge, as I say, at 60 to 62. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to this new week.